Wednesday, August 7th, 2019, Maneco 64, home of alternative economics and contrarian views. So as you can see, I'm still in Switzerland. I'm in my sister's place today. It's a bit quieter here. Her Wi-Fi is better as well to upload the video. I'm going to be in Switzerland till Friday, and I'll be back home Friday night in London. I saw the markets yesterday were very volatile. I saw the stock market rallied quite strongly towards the end of the day. Dow finished up 300, almost regained half the losses from the day before. But overnight things have been different. One thing I like to point out is that the New Zealand dollar is dropped massively as the Reserve Bank of New Zealand, they cut rates by 50 basis points to 1%. Markets expected 25 basis points. So that was a surprise. And what do they say here? The authorities. Well, Zero Hedge says, mimicking the Fed's apparent lack of data dependence, this surprise rate cut followed a strong 3.9% unemployment print. Just like the Fed, RBNZ is clear that global trade issues are an important factor. So they're citing downside risks on inflation and jobs. So I'm looking here also at XAU NZD or NZD, price of gold in Kiwi, and that's made an all-time high. It's at 2,318 right now. I saw gold made an all-time high yesterday against the pound. I think we're trading around 12.20 now. The previous high was 11.94. So all the fiat currencies are going to continue to sink against gold, in my opinion, as I've said many times since, well, 2007, if you've seen my recent videos about that. So what's happening this morning? Well, let's have a look here at what the markets are doing. So it's 7:30 a.m. In Switzerland, which is 1:30 a.m. Eastern Time in the U.S. Switzerland is 6 hours ahead of the Eastern Time, while London is 5. So overnight, we've seen gold trade up to 1490. That was the high. Right now, we're at 1484. That's up $10. Silver is up almost 2%. So silver is outperforming overnight, so that's encouraging. We're at 1672 right now. Silver up 28. It has been as high as 1682. The stock markets have turned around, so volatility continues. You see the Dow right now is down 150, just under 2/3%. S&P at 25,880. We've got S&P down 16 or 0.5%, 2866. Nasdaq 100 future is down 2/3 or 42 points. Currencies, sterling is unchanged, virtually 121.61. Euro is up slightly, it's at 112.06. Dollar is down 0.25% against the yen at 106.22, and the dollar is up 0.4% against the yuan, the Chinese yuan, at 708. Crude oil unchanged, WTI 53.60, Brent as well 58.81. I've seen that the stock markets I've seen that the bond markets yields cratered a couple of days ago. They're again dropping quite strongly this morning. 10-year yield right now is down 6 basis points at 168. The 3-month is at 205. So we're 37 basis points inverted. So that's not a good sign for the economy. Before I finish today, I'd like to talk about the Swiss franc. Being in Switzerland, I'd like to talk a little bit about that. The Swiss franc has always been perceived as a safe haven currency. And why is that? Well, up until to the year 2000, the Swiss National Bank maintained a 40% gold backing for all its assets. But after 2000, they started selling their gold. They sold half their gold. And I think A lot of it was from pressure from the United States, because they couldn't have the credit bubble that we've had since the repeal of the Glass-Steagall in 1999. You couldn't have that with a currency that was going to be above all currencies, basically 40% gold backing. So the Swiss, yeah, they sold half their gold. They got their gold backing down to 20%. I think now it's less than 20%. And many of you have seen that the Swiss National Bank, they're buying a lot of stocks, Franc stocks especially. So gold is becoming less and less important. And I lived in Switzerland before I moved to the UK back in 1992. I lived here for 5 years. I've been coming here for a long time. And even though I'm not, how can I say, aware of everything that's going here, one of the things that I've noticed in the last 15, 20 years since they started selling their gold and their currency hasn't been as strong as it used to be. The property market has gone, bonkers here. People borrow a lot more. There's a lot of more credit, and interest rates here are negative. I don't think that would have happened if they'd stayed on the gold backing. So that's a little bit about the Swiss franc. The Swiss franc, they stayed. There was a Latin monetary unit in the 1860s. They joined that, and it was a bimetallic union, gold and silver, and they stayed apparently, according to Wikipedia, in that union until 1920. Even though they stayed on that standard, gold and silver standard, until 1920. Even though the Latin monetary unit dissolved way before that, and they joined Bretton Woods, and $1 was 4 francs 37. That was the last time they devalued in 1949. While now $1 is less than 1 Swiss franc. So yes, Switzerland doesn't have the 40% gold backing, the Swiss franc, but they did, and that's one of the reasons why. A lot of people can argue a lot of things about Switzerland, about who has their money here and everything, but one of the reasons that Switzerland is a wealthy country, in my opinion, is that they maintained a sound currency up until recently. That doesn't only help the very rich, but it also helps the people that work here. When you come to Switzerland, the other thing that you see is there's a lot of people working here from other countries like Portugal, Spain, because they get paid, workers here get paid quite well. And I think that's a vestige of that. Of course, things here are expensive, but if you do have a job, you do get a kind of living wage that you can live on, unlike other countries at the moment, like the UK, for example. So that's a little bit about the Swiss franc. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. Make sure you subscribe to the channel if you haven't and you're thinking about it. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.